This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian is president of Midwest Market Solutions. We'll have contact information coming up in just a moment. And speaking of a moment, we'll talk livestock. We'll also talk row crops. But as we start, Brian, I don't know how we don't start by talking about the equity markets, talking now the Dow, the NASDAQ, the S&P. The S&P and Dow with both all-time records, I think, yesterday. And then the S&P, if I remember right, opened up at an all-time record here today. It seems a bit of a disconnect if you're out in the country and then you see what's happening on Wall Street. It seems like two different stories here. Is it two stories out of the same book?
It's a different story than any books I've read here recently. This S&P just really kind of started back last Thursday with a higher close after that big washout on Wednesday afternoon, and that was after the Fed announcement. That was last Wednesday. Fed announced they were going to keep interest rates unchanged, and usually that would be kind of friendly for the market and friendly for gold and silver, positive for commodities without an increase in interest rates. But yet the market sold off in the last hour of trade on Wednesday. We dropped 150 points in just an hour in the S&P, which is just unheard of. But the next day we recovered almost all of those losses. And from there, we had a big rally on Friday, Monday, Tuesday. And then, as you said this morning, opened at some new high territory this morning at 8:30, and since then we've kind of pulled back, but I think it's expected after you had such a monster type rally in a week's of time, about 400 points in the S&P just in that short period of time. And I think a lot of people are kind of just looking back and scratching their heads of why these markets are rallying like they are. And you might be saying the same thing of some of the outside markets today. Gold up $164, silver up $2.17. Both of those are over 3% gains. These are some big moves in the stock market, in the metals, and I know a lot of people maybe that are, as you said, in the country are hoping this big move in commodities will translate into big moves in corn, beans, wheat commodities, cotton commodities, cattle commodities, as well as these metal markets. And I think that may be around the corner because we are seeing a little weakness here in the dollar recently. We've broken the trend, the uptrend that the dollar's been in since going back to May. And so with a lower dollar, that usually means positive things for commodities. And we're seeing that strength in gold and silver and possibly the stock market over the last 3 or 4 days. Also, I think they're lowering chances we're going to see a rate increase in September. I haven't seen the odds yet, but at one time they were close to 60 or 70%. I think those numbers are coming down. And, of course, if you keep rates unchanged or even lower rates, that usually weakens the dollar and is bullish for commodities in general. So I think there's a lot of things to like from a commodity standpoint. We have weather that's really the driving force for grains right now. And once we get past the weather or the growing season, we start talking about harvest and yields and demand. I think we're going to see really good prices. I'm really friendly for some of these markets out into 2027. I think there's going to be very good times ahead for the grain farmer.
Okay, I'm going to get over to some of these grains in a moment, but I noticed you had cotton in there earlier. And I want to bring that up because we're really trading at a place right now with this cotton market in the we're looking at mid-80s now on some of these contracts. This has been a real long time coming here. And is there anything behind this, or is it fundamental?
I think every good market or every good bull market is a combination of fundamentals and technicals. First of all, technical picture. I thought the downtrend was broken in mid-June, and we started an uptrending market since that time frame. That started at about 78, 90 or so, the December contract, and we were pushing higher. But I think fundamentally, there's a lot of concerns about some of this crop here. We've not heard a lot of good reports from customers that are looking at the crop and just had maybe too much rain in the spring time frame, had too much hot and dryness in the summer to go along with it. It doesn't appear to be that good of a crop potential, and I think the market is recognizing that because we've rallied, since middle of July, we've rallied from about $78 up to now $83 or 83 cents a bale, and that's an impressive rally when you're going to start talking about harvesting cotton in a few weeks.
And when we're talking weather, we can't ignore what's happening, as you said, with especially the corn. Maybe soybeans not quite to this point yet, but the corn. And we've got a WASDE report in 1 week. What are your thoughts there?
Yeah, so StoneX came out yesterday with their corn number about 184.8 bushels per acre, maybe a little bit bearish reaction by the trade. USDA is at 183, and I think people were using that as a baseline, and they were going to adjust yields downward from there because last year's crop ended up being in that 183 range. I can't remember exactly, but people are anticipating it's not as good as last year's crop. The crop ratings all growing season have been below a year ago, so it makes sense that it would be below last year's crop. So the 184.8, maybe a little bit of a bearish surprise. And, in August, the USDA last year gave us a real bearish surprise, a really big yield number, and StoneX was the closest one by far and away to that yield number, over 186 and a half last August. And when they came out with that number, we saw a drop in futures prices, but then prices did start to recover after that. And so that could be, once you get all those bearish news in the market, sometimes that's a low. I think people are hoping that maybe the USDA comes out with kind of a bearish number next week, and that would be the low. Maybe that would be the biggest yield numbers that we were going to see for the year, and that certainly was the case last year. 186.5 was what they forecast last year. I don't think they come in anywhere near that, but I could see this 184 range being priced next Wednesday when we have that report. So news wires are asking for our numbers by Friday of this week. We'll have a pretty good idea of what the trade is thinking by Friday afternoon or even Monday when they get those all compiled.
We're talking with Brian Hoops, Midwest Market Solutions, online, MidwestMarketSolutions.com. This is Commodity Wrap. This is Commodity Wrap. Our guest today, Brian Hoops, President, Midwest Market Solutions. Brian, I was trying to remember how many consecutive days we had of lower trade over in our cattle markets, our live and feeder cattle. I know we're double digits. I want to say 15, 14, 16, somewhere in there. But since that time, it seems as though we found our new footing and we've been moving higher. We settle higher on Wednesday, both live and feeders. Hogs, well, not so much. That's a whole nother story. But what's this chapter of the cattle market right now tell us?
Yeah, you're referencing back in mid-June when the disaster started. We dropped nearly $25. And we were lower, 15 days in a row and 18 out of 19 or some ridiculous number like that. I kind of like to forget how bad it was during that drop. But as much as it's dropped, we've seen just as big as an ascent in the cattle market. So I think in the last, I'm kind of eyeballing here, but out of the last 9 sessions, I think we've been higher 7 of them in August, cattle futures. So we're starting to retrace a lot of that drop that we saw from June. We are very close to a 50% correction in the August contract. That occurs at about 236.05, so a couple of dollars more to go. We heard some bids starting to surface and a little bit of trade at 235. I think Tyson paid 235 in Nebraska today. And there's some bids in Colorado and Kansas at that same level. So your cash trade going to be a little bit firmer again this week. So I do think here, going into Labor Day, our demand is going to improve a little bit. We're going to see packers keeping the kills down right now, helping the box beef to recover, and a little bit better export business at these lower levels. It's going to give us a rally into early part or mid-September. Then producers, I think, want to start looking at hedging once again. We've talked in the past about cattle starting to come across the border in Arizona, August the 24th. And if that goes well, there'll be 2 more ports in New Mexico. And so cattle will slowly start to come across the borders and refill some of these feedlots. We're going to need to see some of these packer houses increase hours. They're going to increase their kills or even come back online. So that plant in Fort Morgan, Colorado, really important to get an agreement worked out to get those operators back and running, because there will be more supplies of cattle in the fourth quarter. But as we see this rally into Labor Day mature, I think there's going to be some opportunities producers are going to want to take advantage of in that fourth quarter and maybe the early part of the first quarter of 27.
Yeah, and then final thought here on the hog market. I know the ham primal got hammered here, no pun intended, down $10. Seeing a little break higher in the pork bellies, but final thought there.
Yeah, we started this cattle run and it's just starting to change its trend back to an uptrending market. But this cattle run has started in very late July, and about the same time as when the hog market peaked out and has started to turn lower. So it seems like a lot of spread trade going on between the cattle and the hogs. Hog market kind of bottomed and started to rally in mid-June when the cattle market started to break. So traders were unwinding spreads. Now they're putting those spreads back in place, buying cattle, selling hogs, and that's keeping pressure against this hog market. We had a late summer cash rally, and I'm not thinking we're going to see additional gains in this market. I think we probably have peaked out for the late summer. We may see a little retracement rallies from here and there, but I think the biggest rally we saw has probably come to an end at the end of July.
All right, Brian, if we want to visit more, how do we find you?
You can find us at our website, MidwestMarketSolutions.com, list of our offices and our brokers there, or you can give me a call directly at 417-501-5132.
Brian Hoops, President, Midwest Market Solutions, online, MidwestMarketSolutions.com. This is Commodity Wrap.